Hello everybody, this is Betty Academy. Our job is to make school easier, and in this lesson we are going to prepare a bank reconciliation statement. If this is the kind of video that you prefer to watch, kindly like, share, subscribe and comment down below. So what is a bank reconciliation statement? Maybe we'll just have an overview of what a bank reconciliation is. A bank reconciliation statement is a document that compares the cash balance on a company's balance sheet to the corresponding amount on its bank statement. Reconciling the two accounts helps identify whether accounting changes are needed. Bank reconciliations are completed at regular intervals to ensure that the company's cash records are correct. They also help detect fraud and any cash manipulations. Now, let's go to the question. We have this is the question here. The question reads, let's read together. We have the balance in the cash book of Rahisi Traders as at 30th November 2021 was 60,000. On the same date, the balance as per the bank statement was 100,000. On examining the bank statement and cash book, the following differences were observed. 1. Dividend income amounting to 26,000 collected by the bank did not appear in the cash book. 2. Bank charges amounted to 1,200. 3. Amounts paid to Kubwa Kubwa but not presented for payment to the bank amounted to 32,800 shillings. 4. Checks totaling 16,000 had been paid into the bank on 31st November 2021 but was not credited by the bank until 3rd December 2021. 5. A standing order of 1,600 to a hospital fund had been paid by the bank but not entered in the cash book. Required 1. Adjusted cash balance. 2. Bank reconciliation statement. So the first thing that you need to do, you realize that there are some transactions here that are appearing in the bank statement and missing in the cash book, and some in the cash book and the other one not being reflected in the bank statement. So that forms the basis of us preparing this particular bank reconciliation statement. So the first thing that you need to do is to prepare this one, the first one, which is the adjusted cash balance. And what happens is when you look at the question, you're told at the beginning here, the balance in the cash book of Rahisi Traders as at 30th November 2021 was 60,000. On the same date, the balance as the bank statement was 100,000. So at this point, what we are interested with, what is being reflected in the cash book, we have 60,000. So you go to the solution. So this one is the solution. We have Rahisi Traders adjusted cash book. So the first thing is to record this one, cash book balance as at 30th November 2021, which is 60,000. Then the other thing that you need to do is to ensure, don't fill anything all over, but just have this one, and this one you'll have add and less, right? Add, less, leave some space, also leave some space depending with the transactions. So what you're supposed to do, whatever that was credited in the bank, anything that went in the bank in form of an income and missing in the cash book, you have to add it in the cash book as well, because our intention is to ensure whatever we have in the cash book and what is in the bank, they agree. So when you look at the first transaction, this is the first transaction. You are told dividend income amounting to 26,000, it collected by the bank did not appear in the cash book. So that one you also have to add, it's an income, so you also have to add in the cash book. So you have 26,000. Then you go to transaction number 2. Transaction number 2, you have bank charges amounted to 1,200. So those are bank charges amounted to 1,200. So bank charges, you realize bank charges, that one is an expense. Yeah, so it means that whatever we had, the money that we had in the bank, it reduced. So you have, that's why you have what you have to less again here, bank charges 1,200. The other one is about the third one. The third one, you're told amounts paid to Kubwa Kubwa but not presented for payment to the bank amounted to 32,800. So the moment you just realize that you are paying someone and that check has not been presented for payment, so those ones are unpresented checks and you don't touch them at this juncture. Then the other one is 4. Checks totaling to 16,000 had been paid into the bank on 31st November but was not credited by the bank until 3rd. And so that one means we have some checks that were deposited in the bank, and these ones are income. They had not been credited in the bank. So even that one, you just leave it at this particular point and show you where we'll be using those two statements, those two information in the two statements. We go to 5. A standing order of 1,600 to a hospital fund had been paid by the bank but not entered in the cash book. So this one is a standing order. A standing order, this one is an order. You write it, you as the owner of the account, you write and say that I will be remitting, the bank to be remitting a certain amount of money to XYZ, yeah, for this purpose. Yeah, so when that particular date reaches, when the date reaches, so what happens is that the bank will remit on your behalf and the money will be deducted from your bank account. So that one is a standing order, meaning you also have to deduct the 2. So that's why we have 1,200 together with this. So these 2 will be deducted from this particular figure. You do the math. Whatever you get here, 60 plus 26,000 minus 22,800 shillings, you get 83,200. Then the other thing is you are done with the first requirement. The first requirement, you are required to do what? To prepare an adjusted cash balance, which we have now. This is the adjusted cash book balance, 83,200. Remember, this particular figure still, it's not agreeing with the figure that is in the bank statement, which is amounting to, sorry for that, it's amounting to, we have this figure, it's 100,000, right? So, but you still have what? Our unpresented and uncredited checks. So what you are supposed to do at this point, you are preparing the bank reconciliation statement. So you start with the balance as per adjusted cash book. So this one, what you are doing here, you are preparing what? Getting a balance in the adjusted cash book, and this one is the adjusted cash book balance, which is 83,200, which is this. Then the other thing that you're supposed to do, you add the unpresented checks. For the unpresented checks, here it is. We have unpresented checks, amounts paid to Kubwa Kubwa, not presented for payment to the bank, amounted to 32,800, and this is what we have here. Then the other one is about 4. Checks totaling 16,000 had been paid into the bank on 31st November 2021 but was not credited by the bank, right, until 3rd December. So you have your uncredited checks, 16,000. This one you add 83,000 plus 32,800, you minus 16,000, you get 100,000. So this one is the balance as per bank statement, and this is what we had in the beginning here. On the same date, the balance as per the bank statement was 100,000. I hope you are able to understand. You have some tips on how to prepare an adjusted cash book balance together with a bank reconciliation statement. So until next time, it's a bye.